Hey traders, Raghee here, and I'm going to cover something that I discussed with members yesterday that I think is worth keeping an eye on as we go forward through the remainder of May in the S&P and the NASDAQ specifically, okay? So this is going to go back to verbiage that I use a lot, and I'm just going to sort of hyper exaggerate the chart here, but the whole idea of the top of the range and the bottom of the range and how we will define what would really be a breakout in the S&P and the NASDAQ. So let me also mention that when I look at the S&P and the NASDAQ, I look at the S&P as the dog and I look at the NASDAQ as the dog walker. Because of the way the S&P mimics so much of the first, heavily weighted stocks in the NASDAQ, it tends to move with tech. That's something a lot of you know. It can override, meaning the S&P can override its tech tendencies if healthcare, XLV, and if XLF, financials, are together moving higher or lower. In other words, if the tech market's moving lower, but the S&P is going to move higher, it's going to need healthcare and financials to help out. And if tech is moving lower and healthcare and financials are also moving lower, there's a pretty good chance that to the downside, the S&P is going to sell off more swiftly than the NASDAQ would. So consider sort of those two able to either counterbalance the NAS tech influence or act in many ways like a supercharger to the tech NASDAQ influence. All right, so with that being said, what I really wanted to tackle were some levels that have been pertinent in the NASDAQ and in the S&P. And that is, first of all, tech has been very, very strong, and the S&P has been moving with it. And as we move down towards the bottom of the S&P's range, we've also been correcting in the NAS. So here's your bottom of the range, and this is a combination of the -1 V-score, the mean, and also some Darvis support. So you've got an area here of different tools saying either by way of volume or price, we're seeing support in this area. Now, not so coincidentally, the NASDAQ, which is in a far better bullish structure, far more convincing, exceedingly convincing if you ask me, when the NASDAQ pulls back into support of the 21 period exponential and the 34 EMA on the high, you've got really a correction that's viable. So if you're looking at a day trade, as we were on Thursday, markets moving lower, and the idea was, well, do I really want to short the NASDAQ and the S&P? And the answer was no. Because really, the daily was saying there's a chance we could buy the NAS, and of course, this is the dog walker, and the S&P is the dog, which is trading down to the bottom of its range. Let me highlight that. Sorry about the flashing. Some days it's worse than others, but this is a program that I run on TradeStation. I'll show you in a moment, but see how it's trading here at the bottom of the range? That was Thursday. That's what I'm talking about. So keep that in mind. Now, this nifty little window that unfortunately can sometimes make the chart flash as it loads, it's a neat and it's worthwhile having. This is the Futures Trader Pack 2. It's a free plug-in from TradeStation. And the neat thing is I can look at, be reminded of the first notice day and the last trading day for the current and upcoming front month contract. And I could also take a look at the shifts and volume and open interest, which is really important as I'm preparing to roll from one contract to the next, as I'm preparing to identify what, in some cases like crude oil, this has been really important. The market's been rolling out of June far earlier than it normally would and into July. So just a really cool tool to keep there on the side of my screen. All right, so that's really it for today's video. Keep an eye on those support levels in the S&P and NASDAQ. Don't be so quick to short those right now. If I have a short bias, it's really emphasized in transports, in the Dow, in the Russell, in regional banks, and in commodities, in terms of energies and ags most specifically. So that's the way I've been looking at this market, and I'll see you all in the next update.